Hi guys, this is Hector. Today is Monday, the 17th of December 2007. It's 3 p.m. exactly right now, London time. Today I've not taken any trade. I'm gonna show you the setups that I've been following today. First of all, I was following the Australian dollar against the New Zealand dollar for a possible short opportunity. Okay, in this clear downtrend in scenario. All right, actually it's a downward channel. Throughout the overnight session, as the Tokyo session opened for the week, we saw a retracement back, all the way up to the 50 simple moving average, which, as you guys know, is the upper band on this dynamic area of resistance. When I opened my charts this morning, right before the London market opened up, I was seeing price banging onto the 113.00 level. Okay, right there, it was banging onto this level, finding a little bit of temporary resistance. As we can see, the first hour of the London session, actually we formed a red bar. Some sort of a spinning top, something like that, but nonetheless my plan was to search for short entries as long as this level held the price. Okay, I did not want price to breach through anymore into the dynamic area of resistance. Sometimes you may breach it very quickly, and that's all right, as long as price dives back down, just as we saw here actually a few weeks ago. Right, we saw a clear dive into the dynamic area, piercing above the 50 simple moving average, but immediately after price turned around into the right side of the market. Okay, meaning below the dynamic area, below the 50 simple moving average, since we're in a downtrend. In this case, I was basically looking for the same type of price action. All right, perhaps we may get, like I say, a breach through the 50, but as long as it moves back down, it's alright. That quite didn't happen. Okay, and as we made a new high for today, I stopped considering any short opportunity here. The 113.00 level, which in my opinion was the key level to keep an eye on, had been breached. Okay, as you can see, momentum right now actually is in fact nearing the 100. So as far as I am concerned, this whole trend is now finished, or at least it's definitely weakening. Okay, moreover, if we draw some trend lines, we can clearly see that this the main trend line in this downtrend has been definitely breached. Okay, so for the time being, I'm gonna have to cancel this setup altogether. Right, this one I will show you later. Another setup that I was following was the GBP against the Australian dollar for a possible London Open breakout type of trade. Basically, throughout the last few days, what we've been seeing is clearly a price, this market making higher highs and higher lows. All right, in a more or less uptrending uptrending fashion. From there, what I was looking is price to breach above the 235.00 round number. Okay, we were forming some sort of a double top. Okay, with this level, this swing high and that swing high. As the London market opened right there, we were banging onto the 235.50 level. All right, right there, making building pressure into that level. But if I zoom in a little bit, you will see how as the London session wore on, we kept on getting many consecutive bars above that level. All right, right off the 235.00. It seems like the market just could not push through. Moreover, even though we were making higher lows in the individual bars, all right, meaning that the trend is definitely pushing price to the upside and building pressure up on this very level. Okay, that the key level to keep an eye on. Like I said, throughout the entire London session, we just couldn't breach through, really. We were topping out at that level, building pressure, but we could not really breach through. The breakout has just happened, but like I said, it's 3 p.m. London time. It's a little bit late for me to enter now for an intraday type of trade. At the end of the day, this is a setup based on the 1 hour time frame, and as you guys know, any setup that's based on the 1 hour time frame or below, the 1 hour time frame, the 15-minute chart, the 30-minute chart, anything like that, for me is considered an intraday trade, and for me it's a little bit late now to enter the trade. I like to whenever I see an intraday type of trade, I like to take the entry, or I like, the entry to actually trigger in the first half of the London session. Right now they are it's 5 minutes past 3 p.m. London time, so we have about 2 hours left of the London session before before closing for the day, and I just don't quite feel comfortable entering a trade this late, an intraday type of trade this late in the day. All right, if this breakout, which by the way it's rather shy to be honest, there is not really much momentum. We've just broken through, but price is not really moving that much. It's broken for barely 15 pips. Okay, it's basically pipped above, and now it seems like it's going back down. Anyway, like I said, not only it's late in the day, also I'm not seeing that much of a momentum, but anyway, like I said, I'm not taking this trade either. Those were the two setups I was actively following today. Then somehow I spotted what it seems like a belly trade on the Australian dollar against the American dollar, but quite frankly I missed this one. I missed this setup on my the type of the market scan, the process that I go through every morning before the London market opens up, searching for trending scenarios. Well, I somehow must have missed this one. It certainly looks valid, okay, overall. Basically we have a more or less clear downtrend in a scenario as per the moving averages goes, even though most of this down move was generated last Friday with this massive 200 pip drop. Okay, like I say, last Friday. Today we broke below, in the overnight session we broke below this level right there, right, and from that throughout the London session we've seen a retracement back to this former swing low, to the 0.8600 round number psychological level of resistance as usual. The moving at the dynamic area of resistance as well. So quite frankly, this sort of looks like a valid setup, right? At least from a technical point of view. Moreover, if we zoom into the short time frames, in this case the 5-minute chart, since this is a 30-minute chart, we can, or at least I happen to see a 1-2-3 formation, a reversal formation, an M formation, however you want to call it. Okay, this was the low for the day. From there, as I was saying, price retraced back to this previous swing low, which was coming from the previous day, and also the 0.8600, right there. Price the retracement topped out at that level, and from there I'm seeing some sort of like I say, an M formation, all right, a 1-2-3 formation. 1-2-3 formation, which is a bearish reversal formation, as I explained in the I think it's chapter number 3 of my trading course. So it is a reversal formation right off the an area of resistance. Okay, in with a retracement trend line, which in fact is a retracement channel. Okay, as you can see in my screen right now, I'm drawing more or less the channel. It's rather difficult to draw with your mouse, but more or less you get the point. Anyway, the retracement channel, trend line, whatever, is breached. Okay, we have a reversal formation, M formation, right off an area of resistance. So like I say, as a whole, it does look like a valid setup. But anyway, we still the same thing. It's late in the day, only 2 hours left for the London market, which is my primary trading session. Like I say, 2 hours left for the market to close, and you know, I wouldn't, and at the end of the day this is a 30 minutes setup, and no chance I would take an intraday type of trade this late. Okay,